What do YouTube? In this video, we're just going to be breaking down some trades I took this past week and why I took them. Let's get straight into the video. So I kind of like just doing these videos every now and then, breaking down a few of my own trades, showing you that what I talk about isn't just mumbo jumbo and there's actually some, reasoning and proof behind it. So let's waste no more time. I'll show you the TradeZella stats and then we'll take a look at Transpire. So it was a pretty slow week for me, money wise. I only made about $300 this week, which isn't too bad. I only took 7 trades and I've been sizing down recently. I've just really been focused on getting money into my long-term portfolio. I'm just trying to buy these stocks down here at lows because there's not really going to be another opportunity, hopefully, to buy NVDA down 50-60% from all-time highs, or good stocks and companies like Apple and Microsoft down 30% from all-time highs. So I'm just taking advantage of this opportunity I have in the market. Hopefully reward myself in the future. Moving forward, one of the biggest things I talk about on this channel is risk reward. So if I zoom in right here, you'll see number of winning trades 3, number of losing trades 4. But you'll notice up here, my total P&L is $337. And the biggest thing I focus on is having your winners outweigh your losers. Now, it's a problem if your losers are always bigger than your winners and there's clearly something wrong. You can have a 90% win rate, but if each one is $10 and the one loss is $1,000, how will you ever be profitable? I don't really focus too much on win rate, and losing money is part of the market. You're never going to have a 100% win rate as long as you go into every trade with a plan and knowing a fixed amount you're going to lose. Set yourself up with a solid trade plan and a solid risk reward. You'll end up profitable at the end of the week, at the end of the month, and at the end of the year. So that's the biggest thing I focus on. And one reason I like using this platform, so just seeing everything laid out from me just helps me visualize it a bit more. It makes things a bit easier to see where I'm struggling or areas I'm really thriving in. So something also interesting right here is my average hold time. And you'll notice with my winning trades, I'm holding these on average for 2 to 3 hours. In my losing trade, I'm holding them for about an hour. I'm in a trade that's working well for me. There's really no reason to exit the trade. I can just ride it higher and higher. Whereas opposed to a losing trade, I try to cut them very quickly and just move into the next trade, so I don't really have to hold on to it and just keep on watching it dwindle. So let's just jump into the trades and see what I took this week. So like I mentioned, the first trade I took right here was on ADBE. I got the weekly 290 puts on ADBE. I got them around 2-3 per contract. I was risking about like 50%. I only got one contract, so I was risking about $120 in the trade, and I got out about $1.28. So what I was thinking on this trade was you're moving down lower, and there's this big level right here at 298, kind of a cycle level around 300. So I figured once you started breaking down below 298, 297, I figured you'd flush down quickly down to test this region right here on 292, and the contracts would hopefully go in the money. It'd be like a 3-4x potential trade. So if I pull up the risk reward calculator, you'll see that getting in down here, once I pull up the risk reward, it kind of makes a bit more sense. So once I got in down here, like I said, I was hoping for a flush down to 290. These contracts would go in the money. And, probably cut them around down here once you start flushing to the downside. And my stop was going to be around high of day up here in this region. Now, ADBE's pretty illiquid. I've traded ADBE in the past, but until I really trade for the first time, you don't really notice how slow it moves and how jumpy it is. It kind of reminds me of Amazon pre-split, but less liquidity. If you guys trade Amazon pre-split, you know what I'm talking about. So especially on the 5-minute, you'll kind of see these candles. They kind of just sat here in this region around 289 or 298 for about 30 minutes. Now, realistically, something I kind of just could have done better about was just cutting this trade a little bit more quickly. It didn't have to go down 50% or lose $100, but I figured just give it a chance to breathe. And I wasn't home to monitor the trade, so I wasn't really able to stop out when I wanted to. So I figured I'll just let my stop do its job, have a hard stop for the trade. And if I get stopped out, I get stopped out. It wasn't really too much to stress about because I knew the risk reward, if it went down like I planned, it would have worked out in my favor. And like I mentioned in the introduction, you need to keep in mind you're going to have losses when you trade. As long as you go into each trade knowing the amount you're willing to lose, it just makes trading a lot easier because everything's predefined. There's no guesswork involved into it. I knew exactly how much I was going to lose, and I knew roughly how much I was going to make based on risk reward and where my stop loss and profit targets were going to be. I could have just done a better job of getting out this trade a little bit earlier, maybe keep my stop a little bit tighter because I knew ADBE's kind of jumpy. It's a liquid, so contracts are going to move all over the place, and the price action isn't as clean as a big cap or a mega cap like Tesla or NVDA. Could have just kept those factors in mind and just kept my stop loss a bit tighter and not give it so much room to breathe, especially on a weekly contract the day before CPI. Now, I did consider holding these into CPI because I thought the market would continue lowering, take a little bit of risk on. But like I said, I ended up closing around here for about $100 loss. And luckily I did close my position because Adobe gapped up about $20 the following day off CPI being lower than expected. And the contracts, I'm already sure they were pretty much worthless at this point at open. So kind of worked out. $100 to make about 300, 400. It didn't end up working out, but on the next trade I showed in NVIDIA, I made it back the following day, and it was about a 200, 300% return. The next trade I took was on November 10th, around market open on NVIDIA. So like I mentioned on the Adobe trade breakdown, you gapped up off of CPI being lower than expected. You pretty much ran the entire day, a 7% move on NASDAQ, one of the biggest days since 2020. And one of the biggest 2 days since 2008, which might be terrifying thinking about it, but you never know. So when I zoom out to the daily time frame, you'll see that NVIDIA's been relatively strong. It went from lows of 107, and so far the last 2 days it closed up here at 163. So NVIDIA and semiconductors have been relatively strong after hitting these lows down here at 107. They're up roughly 50% from lows. Now if you bought the lows, you're up a great amount. So knowing that, and knowing how weak the NASDAQ has been recently, I know that NVIDIA was strong. And if NVIDIA gets going off CPI, being lower than expected, you really get some momentum behind it. I knew NVIDIA would have some room to run. And there weren't too many levels around here, around 150 up until 160. So I knew if NVIDIA could get going, this could be a massive upside potential trade. I took full advantage of it. And I just wrote this trade up pretty much the entire day on the 9 EMA. I took an entry off of VWAP. If you guys haven't seen my VWAP video, go check it out. I break it down perfectly. I was just watching NVIDIA pull back the VWAP and seeing how it reacted and watching the price action. And once I saw that buyers were in the market and continued to push NVIDIA up higher, I was rolled up the entire day. So zooming back in here to the 5 minute, like I mentioned, buyers gapped you up pretty massively. You closed at 137.6 the day previous. You gapped up to 147. So already the first 15 minutes, you can see sellers try to push you down, but huge buying went to the upside. This already showed me that buyers were in the market with this big wick, showing me that buyers were willing to buy prices down here. Close price up near the open of the candle, which is a pretty big thing to look for if you're looking for buyers in the market. And once I just turned volume on down there at the bottom of the screen, you'll see that on these candles, you had increasing volume to the upside, showing me that buyers were active and involved in NVIDIA and participating this day after such a big CPI print. If you guys haven't seen my 9 EMA video, go check that out once again. And then also, you got the VWAP right here. So let me just draw a flag on here. So you're flagging back to 9 EMA on something like this with decreasing volume, which is something that you look for. When you're looking for a pattern like a bear or bull flag, you typically want to see decreasing volume. They're just some buyers taking profits and setting you up for the next leg higher. So then once you saw this big impulse candle, it was pretty much off to the races after this point, and there's really no looking back till end of day. So I entered around here around 7:15, I believe, one of these candles. It was a little bit early on the entry. I could have waited to get right to VWAP, give myself a bear risk reward trade. But if I pull up the profit calculator, I entered somewhere around here. My stop, I like to give my stops a little bit of breathing room, just so I don't get stopped out instantly. So my stop was down here around 147.6, this key level, and I ended up taking profits around here, around 157, making this a 5-1 risk reward trade. Now ideally my stops could have been even tighter. If my stops are right here, just below VWAP, it would have been a 9.24 risk reward trade. So the odds were in my favor in this trade, and there was really no looking back. It was pretty much a picture perfect trade. I knew that buyers were in the market, and there was really no panic. And like I mentioned in my 9 EMA video, you never got a single close above the 9 EMA until right here. You got a single one. I was close to stopping out here, but because I got the 150 calls, and 150 was around right here, the contracts were already in the money, the volume started decreasing. So they were starting to become illiquid. So even though my stop was at like 415, I believe, not a lot of people were buying the contracts. So I was able to just cancel my stop loss and replace it because I wanted to hold this trade longer and longer. So it kind of worked out in the long run. You tried to close below 9 EMA, but the following candle, you could say yet again, kind of like a bull flag into this key level at 153.9 or 153.30. Big bullish engulfing candle back through this flag. Then once again, you remount the 9 EMA. You break over 153.30. Look what happens here. A break. This previous area was resistance. You turned it into support right here. A break and retest. You continue up higher. Riding the 9 EMA. Literally zero stress in this trade. Once you start pushing up here towards this region, I was already up like 250%. So I was just like, I'm just going to lock it in for the day. Didn't really want to hold a weekly contract overnight, being that it was already 1 day to their expiration. So I just sold for a lot, 250% return. No, not too bad. It's not my biggest return ever, but I'll take it for now, I guess. But whatever. Then that's really all there was to it. Just knowing that buyers were active in the market and just riding the 9 EMA, which are things I always talk about on this channel. just being patient and waiting for days like this on Thursday after a big economic release. And when you have days like this where you're just trending to the upside or the downside, you have to be prepared just by practicing and having screen time. And I was prepared this day. And this just goes back to risk reward. The Adobe trade was a $100 loss. The NVDA winner was about a $500 win. In the future, once I start scaling back up, getting back in your larger size, the profits will be bigger and bigger, and the winners will be even bigger than they are now. So if you guys enjoyed this video, enjoyed me breaking down my trades, why I took them, the thought process behind them, just let me know in the comments below. I plan to make a few more live trading videos, but these trades have just been so long, like an hour plus. I haven't been able to record them all. But if you guys want to see those, just let me know in the comments below, and stay tuned for the next video. Thanks for watching.